Welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 29th of February to the 4th of March 2016, presented by myself, Phil Carr, at the Gold and Silver Club. Today we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll review the top trades of the week. We'll cover live market commentary, trading ideas for the week ahead, and of course we'll be answering any questions you may have during the session as well. So as always, if you have any questions or comments, do keep those coming in the chat function. So before we get started, let me introduce you to the Gold and Silver Club. We are the world's #1 commodities trading and investment coaching company, regarded as the go-to authority on commodities trading, and as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets are routinely sought by major financial television channels and publications which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review and the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please do visit our website, which is www.thegoldensilverclub.com. Okay, good. Right, so we'll have a look at the gold price. Currently, gold is trading at $1,230 per ounce. We'll take a look at that very shortly on the charts. Before we do so, we'll review the top trades that we've had over the last week using the Gold and Silver Club signature trading strategies. So first of all, we had a lovely sell short opportunity last week on cotton, where we came back up. Rallies were really treated as sell short opportunities. We came back up to a major trend channel, which then produced a rejection candle and a good opportunity to re-enter for a sell short with over 215 points profit on our sell on cotton. We also had another opportunity to get into a breakout on gold, a lovely pennant formation forming on Tuesday last week, which broke out and followed through on Wednesday for over 270 point return. And sugar also had a huge breakout to the upside. We caught this off major supportive zone last week for over 130 point gains. There's been some lovely trades in the last week on the commodity markets we follow at the Gold and Silver Club. So what we'll do, we'll move it over and we'll have a look at the charts here. So we'll go over to the technicals. Any questions or comments at all, as always, do keep those coming in the chat. We'll start off with here the gold market, and we'll start off with gold. Primarily, we've had a very strong move over 2016 so far. I'm sure a lot of you are aware of the move that's occurred so far, but gold has gained over 10% in February, its biggest monthly jump since January 2012, with a 10% gain. So it's headed for its best month in over 4 years. And year to date at the moment, gold is up over 16% as investors have sought safety in the metal as concerns over the global economy hit the share markets. This morning we also saw a 1% jump earlier on today on a China rate cut, so we've seen further support for gold overnight, and at the moment we're just sitting at key resistance. Now I'll take you out first of all to the monthly chart. Why is that important? It's because it's the last trading month, last day of the trading month, so it's 29th of February today, and the monthly chart will definitely be utilizing for our analysis as we head into March. So what you'll note on the monthly chart right now is that we have come all the way up to the upper end of the resistance channel, so you'll see that very clearly. We've been in a very clear trend here over the last 2 years for gold, and it's come and retested the upper end of that channel. That's where we're sitting at the moment, at $1,230 per ounce. If we have a look at the daily chart, you will see so far we are following a very clear trend channel where pullbacks are still being treated as buying opportunities. So what we would like to see in order to get more follow through over the US session this afternoon, which is going to be a big decider for gold really here as we move into March, just whether we can breach above Friday's highs here or whether we'll get a break below Friday's low. So if we do get a break above Friday's high, we could really start to ramp up and make a break back up to $1,250 per ounce, which was the highs of last week. You can see here we came up to $1,253. If we do break below Friday's low here, we could start to rotate lower and start looking at the next key levels of support. At the moment, the bullish momentum on gold is holding up. You can see so far we've had a pop to the upside overnight, and we're really awaiting to see whether during the US session gold continues to follow through, if it continues to get bought, or whether we see some profit taking this afternoon due to it being the last day of the trading month. So watching that very closely indeed for additional trade opportunities here on gold too. Now if we move over and we have a look just at the correlations here, first of all we'll have a look at silver, and we'll also look at platinum as well. Now silver, if you look at the monthly chart, silver hasn't fared as well as gold. It has managed to rally over January and February as well, but it just hasn't had the larger move that we've seen on gold so far this year. Now silver on the monthly chart, we have got a very clear pennant formation. We've come back down towards, you can see here, we've come off the upper end of the rejection trend channel here, and we produce an inverse hammer just on the monthly chart at the moment. If we look at the daily chart, now where gold has actually managed to rally and take out its previous swing high here going back to October 2015, silver didn't quite get there. Silver has pulled back today, and what I'm watching for as we head into the US session is whether we find previous resistance here, which is sitting at $14.60 per ounce, whether that level now provides a supportive zone. You can see we've got a rejection candle forming at that level at the moment, and I'd like to see whether this pullback is being treated as a buying opportunity or whether the price structure changes as we head into the US session. You will note we did discuss last week that silver had the potential, if it did break out this level of support, if it took out $15 per ounce, it could fill the gap here. There's quite a lot of clean air for it to break down until it got to this previous level of resistance, which could provide support. So we're sitting at that level today. There might well be a trade opportunity off this zone during the course of the week. We want to see whether this level does hold. We're also looking at the correlation here with platinum. You will note platinum did pull back on Friday, Thursday and Friday, but particularly Friday, along with gold and silver on strong data from the US. In fact, the US dollar index is looking very strong just this morning. It's already breached above last week's highs here. You can see at the moment, I'd like to see whether platinum is developing a bullish flag formation here, so whether it's just going to pull back only to break out higher, if this is just a temporary pullback and we're going to see further surges to the upside, or whether this is going to be something more significant. Again, to be decided by the US session today to see if we break down further, if we take out the low of this trend channel, or whether we just rotate higher, and if this is just going to provide us with an opportunity to get back in to this much stronger upward trend that we've had so far in 2016. So we're also monitoring that very closely over the US session. Now, one of the key markets you want to keep an eye on as we head into the US session this afternoon is definitely going to be the inverse correlation that we're getting with equities, in particular the S&P 500. Now, if you have a look at the chart structure of the S&P on the monthly chart at the moment, we've had a very strong rejection around the 1800 level here. So you can see here we've formed a very strong dragonfly doji formation here, rejected at the lower end of the support zone. So as we come into the last trading day of the month here in February, I really want to see there's a battle around 1940 zone at the moment. So the battle will be decided over the US session today to see if we break and close above that level and continue the momentum to the upside here. And oil has also got a very similar price structure, or whether this rejection candle we formed on Friday follows through and we start to see a rolling over again for equities, and we start to see a breakdown in price. So that will be very important this afternoon. Now, if we go over to oil, and the reason that we mentioned the correlation between oil and the S&P 500, we're currently sitting at the strongest correlation between the two that there's been in over 26 years here. So the S&P 500 and oil, very strong correlation at the moment. If you go over to the monthly chart, you will also note the formation that we've got so far on the monthly here for oil. We'll have a look at Brent, and then we'll look at WTI. So you can see rejection candle forming on the monthly chart as well. For Brent Crude Oil, if we go over to the daily chart here, you'll see where we did break above a previous support, turn resistance on Friday. We got a pop above that level, above resistance, but we closed back below it. Now, so far today, we haven't really broken down much at all. We're continuing to hold around this zone. If we were to see oil pop back above $36 per barrel, and if it does manage to hold above that level, we could start seeing oil build a bit of a base here at the moment. So it is, again, it's an important day for oil here. So Brent Crude Oil, if you have a look at the monthly chart, if we do close with a very strong and bullish candle on the monthly, we could get follow through over March. It's just dependent on whether oil does manage to follow through during the US session today or whether it breaks back down again. If you have a look, and we'll move over also to light sweet crude oil, we've got a very similar rejection candle which is formed on the monthly chart here at a very key level of support. So if we just zoom out on the chart, you will see we've got a very key level on light sweet crude oil which has found support. Again, strong rejection candle on the monthly chart. If we go over to the daily, we're actually forming, seems to be the start of a head and shoulders formation here where there is the potential to break out higher. It's just dependent again on the US session as to whether we get a retest of 34, and if we get a breakout above that zone. Oil still has some work to do here, but ultimately right now we are at a decision point for oil. So I just take you over to some of the fundamentals on oil at the moment. So we've seen earlier on during the UK session today, oil prices mixed as markets ponder whether crude has bottomed out or not. So you can see this sort of formation that we're getting at the moment does look like we could be starting to base out, but it's not a confirmed move at the moment. The US rig count dropped again for the 10th straight week. Trading data showed the amount of open positions in US crude contracts that bet on a further fall in prices has also fallen over 17% since mid-February to their lowest levels in 2016 so far. So traders have, this is the CFTC reports, traders have sharply raised the bullish bets on oil after talk of a global production freeze and signs of a falling US shale crude output as well as growing demand. So we're starting to see certainly this basing formation follow through in the chart, but we just need a confirmed move at the moment. The total oil rig count is now falling, it's below the required to sustain oil production, and as a result production levels are beginning to fall. So again, that was the Baker Hughes numbers which came out on Friday, and again, just to recap on that, they fell for the 10th straight week. So that has boosted bets by traders on rising crude oil prices, and we've seen a cutting of short positions. So we just want to see whether we'll get confirmation of that as we head into the US session today. I would mention though that production overhang still remains huge at the moment. There's still a big surplus, so that is why we've got this this decision point at the moment where the market is pondering whether we can follow through at the moment on oil or whether we'll just simply rotate lower again. So to be really decided, I would say by today is going to be quite an important day for oil here. If you look at the weekly charts here, you can see this basing formation as well, which is starting to build momentum, but it's not confirmed yet. It could still rotate lower. So we're watching that very carefully and also looking at the inverse correlation there with the precious metals too. So it should be a very interesting day today as we head into the US session. Now I'll just bring you out to the softs here. So first of all, we had a lovely opportunity to take sugar for a breakout last week, which had a huge move just from its supportive zone. We formed what is known as a railroad setup here, followed that through. At the moment, we've come back up to some overhead resistance here where I'd like to see whether this move is going to follow through or not, or whether we're going to rotate lower here for sugar if it's a bit overextended. If we just take out this low, which is sitting at about 1350 at the moment. If we do break that zone, there is a potential for sugar to rotate lower, but if it can break out of its trend channel here, we could get some good follow through. So just monitoring that on sugar. We've taken off a lot of our profits off the table so far on this swing trade, but ultimately waiting for a resolution at this major trend channel overhead. Now, if we move it over and just have a look also at cotton. Cotton is looking quite interesting here as it comes for a retest of its major supportive zone. It is getting oversold at the moment, but at the same time, would like to see whether we can follow through with a close below this major swing low. So if we just go out again further here, we'll have a look at the major monthly charts. You can see where cotton is closing right at the monthly lows, and a break of this zone. It has been a previous level of resistance which could turn into support, so we need a little bit more confirmation before re-entering in another position short here on cotton. But you can see where it is rolling over. It looks like it does have the potential to actually break through this major swing low, although in the short term it is overextended, so it would be preferable to sell into another rally at the moment on cotton. So we're also keeping an eye on the next trade setup there as well. If we move it over to the grains, we'll have a look at wheat. Ultimately, wheat right now, if we go over again to the monthly chart, we are back at a very key supportive level Wheat has been quite weak recently. It's broken down to 5-year lows last week, but we do have a supportive channel which is sitting at 444 here. So you can see right now that was a previous resistance zone just going back to 2002. That's provided support in 2006, 2010. We're sitting at that level at the moment. So wheat does need to do a little bit more work here, but it has the potential to rotate back up to resistance here. Watching the fundamentals very carefully here as well, but I would have wheat on your radar. There's quite a strong correlation between also the oil market and the grains at the moment, so large sell-offs in oil do put pressure to the downside on wheat. So if we were to see oil follow through today with a breakout and it's starting to build a bit of a base, we would also expect the grains here to get a bit of a lift to the upside as well. So you can see we're starting already today in the European session, we're already starting to gain some ground here. If we take out the last 3 days worth of highs here from Wednesday, Thursday and Friday, we could start to build up some momentum. So watching that very carefully on wheat at the moment. Similar situation really here on corners. It's come off a major supportive zone at 345. You can see here on the monthly chart as well, just going back to last month. And right now looking for some opportunities here again with fundamental. We need support here on the fundamental side in order to go for a long right now, but we have come back down to again a major level of support on the corn chart. So we're monitoring both corn and wheat very carefully, and it's the same story really for soybeans here. Although soybean has again broken down over the previous week, it is back at a major level of support where we're looking really for some confirmation and signs of reversals around this supportive layer, which is sitting at 860 at the moment for soybeans. So watching all of the grains now, wheat, corn and soy, for potential rotations from support, but also dependent on whether oil does follow through today. If we see oil rotate lower again this week, we're likely to see more downside as well for the grains there too. So I would really suggest the top markets you want to be keeping an eye on as we head into the US session today. Definitely gold. You can see here at the moment you do have some overhead resistance here on gold in the tighter time frame, so we're developing again a bit of a pennant formation. So gold, it does need to break above Friday's high and also Thursday's high to pick up some momentum here and ultimately take out last week's highs to really start to build some ground and start to break out and take out these previous levels and these highs from February 2016. So if we can take out 1263, we would definitely be starting to really build solid momentum to the upside. But right now it is decision time a bit here for gold to see whether it follows through during the US session. Again, I would also monitor the inverse correlation with equities. You've seen a bit of a pullback this morning, but we've got a hammer so far just forming a rejection candle on the chart. And if we also have a look at oil as we head into the US session here, you've got a rejection candle starting to form as well, but we're just a little bit of a way away from taking out these previous levels of resistance. Brent slightly stronger than WTI at the moment. You can see here it's making another run for it. If it breaks and closes above $36 per barrel, that would start to really provide a good base here. And just note the CFTC reports and data are showing that the amount of short positions on Brent have been reduced and more. We've seen a raise in the bullish bets on oil after global production freeze and signs of falling US shale crude output, as well as growing demand. Okay, so that could have some impact here as we head into the US session this afternoon. So I definitely think it's going to be an important day, the last trading day of February. So a lot of traders will be starting to reattribute their trading portfolios and moving assets and potentially taking profits. So what I shall do, I'll just take you back, guys, before we just wrap it up. I'll just take you over to the Private Traders Club, and if you would like access to the Private Traders Club and everything that includes, which includes access to our live trading rooms throughout the week, so you can also join us for those where we go into our strategies a lot more detail, the exact trades that we're looking to take, the entry levels, the exit levels, to take profit zones, the trade management around all of those trades. You get live during the session, you get all of your questions answered. So just essentially that is at www.theprivatetradersclub.com. Once you're there, you'll have this page in front of you. You can also get access to all of the live trade setups that we provide, which include trade management around those, from everything from moving your stop losses, you're trailing up your stop losses for positions, making the most out of your trades, trade management at every step of the way as you take advantage of the swing trades in the market, across agriculture markets, across the precious metals, and also across the energy markets. We're with you step by step, every step along the way as you continue to manage those trades. We provide you with updates. You can also access the Master the Markets trading course that takes you from everything through to risk management to setting up your charts, all of the strategies, that we trade at the Gold and Silver Club, how to compound your account, and how to utilize all of the indicators that we use at the Gold and Silver Club, and really teaches you step by step how to trade commodities exactly the way that we do at the Gold and Silver Club to really take your trading to the next level. And as well as that, we provide a week ahead trading plan. Every single weekend you get a week ahead trading plan, which really sets you up very nicely for the week ahead, ensures you're fully prepared so you don't miss any of the trading opportunities for the week, which includes a review of all the fundamental announcements. It includes review of our current open positions as well as new trades that we are getting into. Again, very transparent on all the entries, the exit, the take profit levels that we have on all of those trades. Goes much deeper into chart analysis and commodity and commentary on all of the commodities that we trade, as well as you also get access to our VIP email support line. So any questions, whether that's on the trading course, the technical setups, or any market related queries, you can have those answered. You just need to go down to the bottom here, just are you ready to take your trading to the next level? Click on enroll here now. So once you've clicked on that, you'll be taken to application, and you just want to make sure that you fill in all the fields of the application. And once you've done so, click on the red tab at the bottom, which is just apply here now. And once you click that, a member of our team will get in touch with you ASAP. Now, you can also get in touch with us, just depending on which is your closest office, either our UK office, our USA office, our Africa office, or our Asia office. The UK number is 0207 193 0403. Our USA office is +1 646 808 0403, and our Africa office is +27 11 083 8403, and our Asia office is +852 8191 0403. And all you need to do is just go to www.theprivatetradersclub.com in order to complete an application or call us. So I wish you all a profitable day's trading, and I really look forward to working with those of you who will be joining us at the Private Traders Club. Bye bye.